Hey everyone, welcome back to the Crypto Code. This video is important because the market is at one of those moments where every investor needs to think seriously about their next move. Are we preparing for more downside or positioning for the next major opportunity? Let's talk about it. Before we jump into today's topic, we want to remind you that here at the Crypto Code, our goal is to provide you with the top news, research, and tips when it comes to finding projects with huge profit potential. Stay to the end of this video and learn how you can earn $10 in Bitcoin and a free weekly trade alert just for attending one of our free workshops to learn more about who we are and what we do. No purchase needed. Our trade alerts have a 93% win rate, so make sure you take advantage of this free alert. Remember, I am not a financial advisor. This is not financial advice. So do your own research before you make any crypto trades. Okay, so Bitcoin has been slowing down after a strong run, and sentiment across the entire market has been shifting quickly. When momentum fades and fear starts rising, a lot of people immediately assume a deeper correction is coming. But before we jump to conclusions, we have to remember that no two market cycles behave exactly the same. Some cycles pause before moving higher, while others dip before the next big push. The most important thing isn't guessing perfectly, it's having a plan ready for whichever direction things go. One approach investors use in uncertain conditions is shifting some of their portfolio into gold. Gold is a defensive asset that typically holds its strength when riskier markets pull back. It doesn't behave like altcoins, it doesn't experience extreme volatility, and it's steadily appreciated over long periods. If the goal is to preserve capital while waiting for the next strong trend in crypto, gold offers stability without completely stepping away from the market environment. Another approach is moving into stablecoins. This is the simplest and safest option for anyone who wants to protect capital and stay flexible. With stables, downside becomes zero, and it's easy to re-enter the market whenever the right setup appears. Stablecoins make sense for investors who prefer to wait, watch, and strike when conditions improve. The main thing to avoid is relying on risky yield programs during uncertain market phases. The third strategy is rotating into Bitcoin instead of staying heavily exposed to altcoins. Historically, Bitcoin tends to experience smaller declines during major pullbacks, and it almost always leads the recovery when momentum returns. This makes BTC a strong middle ground option. It keeps us in the market but reduces the extreme volatility that smaller projects face. When things do turn around, Bitcoin usually gives investors an early opportunity to capture upside before rotating back into altcoins at better prices. The fourth approach requires more involvement, but it can be extremely powerful long-term: tax loss harvesting and restructuring the portfolio. This involves selling positions that are down, realizing the loss for tax benefits, and then buying back only the coins we truly believe in for the next cycle. This can dramatically lower our average cost and position us to reach profit much sooner when the market recovers. It does require staying active and understanding tax rules, but the long-term payoff can be significant. So which strategy is best? Every approach has trade-offs. Staying in altcoins offers the biggest upside but also the biggest drawdowns. Bitcoin gives exposure with more stability, gold protects capital, stablecoins eliminate volatility but require good timing on re-entry, and tax harvesting requires effort but can save the most over time. The right plan depends on our goals, our tolerance for volatility, and how hands-on we want to be. There isn't a single perfect strategy, and the best approach will depend entirely on what each investor believes about the market and how actively they plan to manage their portfolio. Some may choose one path, while others may blend different approaches to balance risk, stability, and opportunity. What matters most is having a plan that fits our goals and prepares us for multiple outcomes, because every market cycle brings unexpected turns that no one can perfectly predict. Now we'd love to hear from you. Are you leaning toward Bitcoin, gold, stablecoins, tax harvesting, or a mix of strategies? Drop your plan in the comments below. Thanks for watching the Crypto Code. If you found this video helpful, please like, subscribe, and hit the notification bell for more crypto insights. Let me know your thoughts on today's video in the comments below. You can also check out what we do here at the Crypto Code by registering for one of our free workshops where we show you how we and our students profit in crypto no matter if the markets are up or down. If you register for the workshop, you also get access to a free weekly trade alert. Attend our free workshop, take a short quiz at the end, and we will send you $10 in Bitcoin. No purchase needed. We have already given away hundreds of thousands of dollars worth of Bitcoin just this year alone. Just look for the link in the description of this video to register for the workshop. It will be worth your time. Our public trade record currently has a 93% win rate, and you can view it here. Best of luck with your investments, and remember to stay informed and stay safe in the crypto world. See you next time.